It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, smartest guy in the room, Mr. Michael Becker.
Hey, Paul.
I should say Mr. Mayor of Beckerville. How are you today?
Doing well.
Your Honor.
Doing well.
Michael, who owns 5,600 apartment units in the Dallas-Fort Worth and now expanding out to other regions a little bit.
Yeah.
Owns 27 properties, up to his eyeballs in non-recourse debt. I don't know how you sleep, my friend.
Yep.
And has raised over $125 million. Him and his group at SBI have done a fantastic job for their team and for their investors. So thanks for being part of the show, Michael. Appreciate that.
Yep.
What's going on in the Old Capital world that listeners need to know?
Yeah, again, we have the conference coming rapidly approaching here, September 13th, AT&T Stadium. Looking forward to having, one of the premier multifamily events, one of the only ones I'm aware of that focuses on workforce housing, on Class B and C. A lot of the players in the major Texas markets, but we're going to really have people from all over the country come out. So, we definitely encourage you to come hop on a Southwest jet or an American Airlines jet and get out to Dallas and come to the conference. So we're expecting to have, around 700 people at the event. So we definitely really look forward to seeing you guys come out, and it'll be great networking opportunities for everybody.
Yeah, I was at the AT&T Stadium with 100,000 friends of mine the other night. We went to the Eagles concert there. That is one big venue. So you're going to combine two things when you're going to see AT&T Stadium and have one of the world-class the multifamily conferences to participate in. So that is going to be up on September 13th. Go to the Old Capital podcast to get your tickets for that. Michael, I got a question that came in from a listener, and it sounds like that listener is looking to buy an apartment building. And when you buy an apartment building, you have to pay a fee to do the third parties. One is the phase one. That's the kind of the environmental. Two is the property condition assessment report. That's an engineer going out to the property, kind of figuring out what they have and have not for health and safety of the property, and kind of figure out what the capital has to be put together on a yearly basis to be put back in the property. And the third one is the appraisal. So the question that came up is, Michael, I'm working with an appraiser. What do I need to know and give to them?
Yeah, so when you work with an appraiser, they're going to have a checklist of things they want to give to you. So they'll have like a laundry list of things you need to provide, some market data, and then typically what they'll want is they're going to want a rent roll. They want a T12, so a trailing 12-month financial statement, basically like your financial statement for the last 12 months broken out monthly. And then they're going to likely want to have an operating budget and then sort of like planned capital improvements or upgrades you guys are going to do to the property. Those are the main things they're going to want. There'll be a bunch of smaller ancillary stuff that they ask you for, probably some forms to fill out. They'll typically go do a property inspection, or they will go out and do a property inspection and then, sample some of the units and then kind of do like a real short lease file audit, kind of sample a few here and there. So that's basically what the information you need to provide. That's kind of like the formulaic response. But, basically what the bank is charging the appraiser to do is come in, make sure that the value that you're buying the property for, if you're refinancing it, they kind of use that value to then make sure that their loan to value is within reasonable range within their policy guidelines. So it's not more than 80% or 75% if it's a refinance or less is kind of what they want. And then really they also utilize the income approach that the appraiser does and kind of utilize the appraiser's PROFORMA when they come in and start sizing their loan. And specifically what they utilize is a lot of the expenses that the appraiser kind of budgets or PROFORMAs, what it's going to take to operate an apartment complex like the one that they're charged to appraise. So, specifically speaking, some of the stuff that, kind of when you get a little bit more sophisticated in this business, some of the things that, you need to work on are, if we're buying a property and we have a lower payroll number than what the current owner is operating at, sometimes we go back and forth with the appraiser trying to justify that we can operate our apartment at $1,100 a unit in payroll when the current owner is paying $1,250, and so we need to provide them some documentation, some support that justify that we can actually use that lower number, and or that there's another one that's R&M, make ready. Those are some things that we need to kind of justify that we can actually operate this with maybe a little bit lower repairs and maintenance or some make ready costs than what the appraiser has. So you need to give them some comps of some other properties, or you typically kind of work with your budget and the management company, kind of give them some of that information. That's certainly it. And then one of the bigger problems here recently has been property taxes. That's certainly been a challenge. So the way the Fannie Mae underwrites is to kind of take the lesser of whatever the appraiser is going to use or the stated notice value. So if you're kind of the first, basically in Texas around the notices now start coming out in April. They used to be always May 1st, but now they're out in April. So that time from about April to, June, July, maybe even into August, it sometimes can be tricky because you haven't settled your property tax protest. So maybe you got notice at a higher amount. So that's some of the stuff that you kind of work through maybe with a tax consultant to help your lender and your appraiser get that number down. Another tip as well is on the insurance one. That's another line item that if you have an insurance quote from your insurance broker that's lower than what the appraiser is underwriting to, you can submit that to the lender and to the appraiser, and they'll underwrite at a lower amount as well. So those are some of the things that we think about. Those are some of the common things that we have to kind of work through when we're talking with appraisers.
The appraiser, their feedback is absolutely important. To the lender, your opinion is important, but really means nothing to the lender. What do you think the value of the property is? It is only the lender's opinion is the most important thing for the appraiser to the lender. So what I mean by that is if there's a problem with the transaction, problem with the appraisal, and it's not going to go through Fannie Mae because there's some problem with the valuation or they can't get to the right NOI on the deal, you may have to pick up and bring that appraisal from Fannie Mae over to a bank and to maybe a bridge lender. So some things can and do switch during underwriting of the transaction where you thought that you were buying it at this thing, at this rate, at this level of loan amount. The appraiser comes back and shows you that the property taxes are going to go up or it's been revalued in the middle of the transaction. You may have to pick up your marbles from the lender, take that appraisal and go over from Fannie Mae and bring it over to a bank bridge lender. So these transactions can and will change, just so always be observant on that one. So anything more to add on, Mike, on that one?
No, yeah, just be proactive. I mean, the lender primarily utilizes the appraisal for one, to make sure they're in guidelines with loan to value, and then two, a lot of the operating expenses. So on the Fannie Mae and Freddie Mac, they have to, whatever they underwrite to, they have to have the appraiser come back and justify it, so they stay in compliance if they ever get audited with Fannie Mae, Freddie Mac. So that's really some of those expenses are the big ones that you can be able to work through with your lender and your appraiser if you need to kind of lower some of the underwritten operating expenses, so you make sure you get the loan proceeds you need.
Your numbers in the operating memorandum that the listing agent puts together, they may be true, but most of the time, sometimes they're not true on what property taxes are. And such that's the largest line item expense. Find out exactly where you think that the new tax rate is going to be, what your new tax amount is going to be, what that line item is going to be, and it's the appraiser that makes that decision in writing that tells the lender what it's going to be. So make sure that you're close when you're underwriting these transactions of what the valuation is and what the new property taxes are going to be. So, Michael, if someone wanted to know a little bit more about what SPI does in your investing group, tell us a little bit how they get to know you. Yeah,
the easiest way to find out more information about what we do at SPI Advisory is simply just go to our website, which is www.spiadvisory.com. That's SPI like spy, advisory.com. There's a contact us form. Just kind of fill that out. I'm always happy to have a 10 or 15-minute telephone call with listeners of the podcast if you want to get to know a little bit more about what you do or potentially even working with us at SPI.
All right, some great information concerning working with the appraiser. So thanks, Michael Becker, smartest guy in the room. I'm Paul Peebles. Have a great day.